Okay, we're going to get started here. This is the SPX 70TE workshop. So if you're in the wrong place, check your ticket and just make sure that you're in the right place at the right time here. Okay. All right. My name is Al Asada, and I'm going to be sharing I'm going to be sharing one of my strategies today, and that's 70TE. It's one of my favorite, actually, and I've been working on this one for about 2 years, and hopefully you'll get a lot out of it today because we're going to put a lot of focus into this particular trade and what I've done, to make sure that it's consistent. Okay. All right. Okay. So first of all, I want to make sure that you guys are able to ask questions, and if you would do that towards the end of the webinar of the workshop here, that would be great. I will get to all of your questions. I promise you, we have enough time, and it shouldn't be more than an hour today. Okay, in this session. All right, so let's get started. All right, so what can you expect? I'm basically going to show you how you can make consistent returns monthly based on margin capital at risk using high probability trades, in this case, the SPX 70TE trade, without taking large losses, and to make those returns month over month. What you'll learn today is basically to select the right options based on certain criteria that I'm going to share with you. You're gonna learn how to enter and exit the trade. You're gonna have a general understanding of you're gonna learn how to prevent large losses and have a general understanding of when not to trade and how to trade consistently profitable, right? And that's really the goal of any trader. So stick with me till the end. There's a special bonus that I'm going to share with you. So hopefully you'll be with us the whole way. With us. Okay. So first, just make sure you turn off all the distractions. Some of the material is detailed and can be a little complicated. You're going to receive a replay of this session. So don't worry. If you miss something, you can always go back and listen to it. All right. And again, I just want to make sure that you are able to ask your questions. And we want to do that towards the end of the session. All right. So everyone gets a chance to listen to the material and get caught up. So take notes and make sure that you have those questions ready. Okay. Number one, wanted to ask you a question and basically why you're here today. Okay. So number one reason, and I have three reasons here. Number one reason is that you're interested in learning new strategies that will take your trading performance to the next level, and you can finally leave that 9-to-5 career, behind there. Okay, you've seen, heard about, read about others making money in trading, but you just don't know how to do it, and you're just not seeing your account grow fast enough based on your goals. And number three, you've tried different trading strategies and you thought, okay, this is it, only to discover that it's just not getting you to the place of consistent trading results, right? So I listed three reasons, right? Just a show of hands here, which one is the main one for you, or if it's all one, two, or three of them, okay? Three, thanks, Gary, good. Hey, Tom, all of them, yep. And that was me too, guys. Trust me. Great. Thanks, Dave, Sam, June. Okay, perfect. Great. So for any reason that you're here, I want to support you. All right. And just to make sure that, that I'm delivering information to you that's of value. Okay. All right. I'm not a billionaire. Okay. I'm just a regular guy. I live in Puerto Rico with my wife. I have 5 kids, 4 of them in the picture there, and that was a MBA picture a long time ago that I did with my parents with us there. So just a regular guy living the good life here in PR. All right. Okay. So let's set the mind straight. Let's set the state of mind here correctly. Okay. And trading really has a lot to do with your state of mind. Because psychology, as you know, is one of the major factors of not being successful in trading. Okay, so let's imagine what it would feel like if most of your trades were winners month after month, and it would be confirmed by watching the size of your account grow at the same time. Okay, and on top of that, becoming the trader that no longer takes large losses but consistently trades according to a true and proven trade plan that is profitable over time, allowing you to grow your account month over month, right? My trade plan for 7 DTE is just that. And it wasn't an overnight thing, okay? It took me years to perfect this strategy, and it works very, very well in all kinds of markets, okay? And you'll see why when we get through it. So stick with me here, all right? Okay, so let's talk about the basics first, because I know a lot of you may be in here that don't know what actually a credit spread is, and especially not what an SPX credit spread is. Okay, so the SPX is the indice that tracks the S&P 500. It is not tradable other than trading options on it. Okay, all right, so let's talk about a credit spread. A credit spread is a combination of 2 puts or 2 calls, and these are called verticals, where the put or call is sold is more expensive than the put or call that is bought, right? Okay, so in this case that I'm sharing with you here, this is you're selling 10 contracts of the SPX, and 100 means is that every contract is worth 100 shares of the indice. Okay, so it has nothing to do with 500 or the 500. Okay, 100 is just the numerical value of a contract. 30, 10, 35. And so what you're doing here, and this is a bull credit spread, which is a put spread, okay? You're selling, what you're doing is you're selling the 310 put and buying the 3005 put, okay? And those two premiums make up the credit. And so you'll actually receive a 45-cent credit, and that per contract. Okay, so in this case, it would be 45 cents times 100, right? That's $45 times 10, that's $450. So you would receive $450 into your account immediately when you put on this trade. Okay, that's a credit spread. So you're receiving a credit. Okay, next here. Okay, the trade is considered to be a high probability trade. All right. And let's move on here. I see 100 participants, and I'm wondering, okay, it went down to 99. Okay, I'm wondering if that's the top that I can go. Okay, we may have that little problem here, but in any case, you all will receive the replay on this. Okay. All right. So let's talk about risk reward. And risk reward for a credit spread is not good. Actually, it's pretty bad. And so you're giving up high probability trade for the risk reward, okay, on this trade. And that's why you have to be very careful in managing this trade so that you don't get into trouble, right? So in this case, the risk reward is 5,000 that you're putting up, right? And this is the spread that I just put up. And the max loss is $5,000 in this particular trade. That's a lot of money to lose in one trade, right? Right. But it's possible that happens. And so what you need to make sure of is that you have your trade plan so that you never ever get into a situation where it's going to breach that particular spread, and you can lose a lot of money if that happens. So we have tools in the trade plan, right, to adjust this trade way before that happens. Okay, and so this is a trade that's range, for range bound markets, and you want to make sure that you're trading it very, very carefully. And so I just want to make it really clear. Okay, all right. So let's talk about options decay. Because this is one of the profitability factors in this trade, and we're going to go through that. Okay, so just a little basic education on options and their decay. the first, and these are call options, okay? The first, which are similar to put options. So the first 68 to 33 days, the rate of decay is 34%. Okay, so they decay 34%. 33 days to 5 days, the rate of decay is 57%. And then 5 days to expiration, the rate of decay is 100%. So towards the very, very end of the life of the option, the rate of change for this decay is greatest at that time, okay? That's part of the reason that 7DTE trade is so profitable, just letting it sit there, okay? Because the decay in the option is doing all the work for you, okay? Okay. Yes. Again, I'll answer questions right at the end, okay? At the end, and we'll talk about the details of the math here for these trades, okay? All right, so let's talk about profitability factor, okay? The first one is implied volatility. Volatility means, okay, it's basically the movement of the market, and what happens when there's a lot of movement in the market, the premiums tend to go up, right? They get pricier, okay? It's kind of like supply and demand, right? So what you want to do is you want to sell options when the volatility is higher and buy it back when they're lower. So as the market is going up today, you know, I've been watching volatility kind of going down. Okay, not too much, but it was, you know, it was going down as the market was going up. Okay, and usually they're inverse. Okay, but sometimes even when the market's going up, sometimes volatility goes up depending on how quickly the volatility, you know, the market moves. All right. So this really affects the premium collected. Okay. Secondly, profitability factor is theta, which we just talked about a few minutes ago, and that's the rate of change, and that's the rate of decline due to the passage of time. Big factor in 7DTE. Okay. Third is market direction. So if we're putting on a put spread, which is a bullish, bullish spread, and the market's going up, well, the direction of the market is in your favor. And I mostly put on put spreads, okay? And you'll see when we talk about that in a few minutes. I mostly put on put spreads because the market is generally going up probably 2/3 of the time, and sideways some of the time, and then down very few times, right? But when it does go down, it goes down much more aggressively, just because people are trying to get out. All right, so let's talk about general risk management guidelines and daily routine, okay, that I have. All right, so I'm going to go through these pretty quickly. Always trade with a plan. Number one, determine your max loss risk reward before entering a trade, so you know what you're getting into. All right, trade no more than 20% of your credit margin based on total trading capital. Leave room for drawdowns, okay, in these trades. That's what you need to do in case you need to adjust the position. All right. Don't allow more than a 2% loss per trade based on trading capital. So if you're using $10,000, your loss should be no greater than 200. Okay, and that's how you manage. That's how you would manage this using that. Okay. For highly trending markets, position trades to follow the trend. Then there are exceptions to that guideline, but those require more understanding of the market, reversals, etc. And you need to have a little more experience to understand how that would be managed. Okay. And then never hold short-term credit spreads overnight. And when I say short-term, I'm talking about 1 to 2 days. I'm usually out of these trades, or I adjust them before 2 days out, just because it gets very expensive when you get closer to expiration. Okay. And then you want to make sure that the size of your trades, is in line with your emotions. And this is a big factor, even though it's not mathematical, but it's psychological. Okay, so if you see a big drawdown in your account turning red, it forces you to make different kinds of decisions. Okay, and you want to make decisions based on your trade plan, not on your emotions. All right, so we covered that. So pre-market routine, review areas of support and resistance, and we'll talk more about that in the session. Review the dollar, where that's at, whether it's, usually with the S&P 500, when the dollar goes down, the pricing of products for the S&P 500 is, goes lower. So there's a correlation of that to the dollar. Okay. I'm not going to go into all the details of that, but just keep that in mind. 10-year treasury. If you guys have been around and you've been listening to the news lately, right? We had a big spike in bond rates lately. Well, that puts pressure on the market in different ways, because what happens is that the treasuries compete for dollars. Okay, so when rates go up, there's an attraction to have solid returns based on those rates, and so money leaves the market. Okay, also it affects technology stocks, especially because those are growth stocks, and they tend to have a lot of debt, and low cost debt for them is good. High cost debt for them is not good. And so you'll see a drop in those markets when that happens, because the S&P 500 has a lot of weighted share stocks like Apple and Amazon, right? They take dominance, and a lot of those are considered tech stocks, and so it does affect the S&P 500. Okay. All right. Review futures, and you can see where futures trend overnight. I trade micro futures, and that gives me an edge, for understanding where the market's going and the patterns, etc. And so it's just another way of understanding where to put these trades on and where not to. Okay. Fixed level is the volatility index. We talked about that, and determine what your positions are, even before the market opens. And I wasn't, I may or may not put on a trade today, but I put them on, and I save them into my phone just to make sure that I know, what I want to do, and I don't have to think about it when I put on that trade and look it up, etc. And everything's right. Okay. I do that before the market opens, so I'm prepared. Okay. So post-market routine, determine if rules were broken and why. Determine if risk is within acceptable levels within your, especially for wins, because what happens is if you make if you have a bad trade that makes good money, what happens is that you become complacent, right? I say, oh, I can do this again. I get lucky, and it'll work. Well, the next time you may get a huge loss. All right. So you want to stick to your trade plan and stick to your rules here. All right. Okay. So the other side of this is determine if your losses were within acceptable ranges too. Too big of a loss and too small of a loss is not good. Big losses are due to position size, to large and breaking rules, right? To do that. So losses that are too small means that you're either trading with fear, right? Because you may have had a big loss, or you're not risking enough to offset your eventual losses. All right. So you have to be centered in what your profits are. All right. Determine if tweaks or adjustments to your trading plan is necessary. And I'm always doing that. I mean, not so much now with a very solid trade plan, but especially when I put on new types of trades, and I'm doing that constantly, and making sure that I making sure that the trade plan is in line with what my current trading is. Okay. All right. So those are the risk rules in general. Learn them, study them, put it in your trade plan, and you should be good with that. All right. Okay. And I do, by the way, give my trade plan out for free. And if you don't have that, I'll set up a link that you can get my trade plan for free. Okay. All right. So let's move on here. So now let's talk about the 7 DTE trade. Okay. So this is actual trade plan material here. All right. Now I enter with small positions using multiple expirations. What does that mean? That means I have, right now as we speak, I have trades that are expiring, 7 DTE trades that are expiring in 4 days, and I have trades that are expiring in 7 days, okay? And I'm planning to put on another trade before the end of the week that expires in possibly 8 days or 7 days, all right? Both of those trades right now that I put on recently are very, very close to being filled and closed. Okay, just checking here real quick. Yep, they're about 3 or 4 cents away from being closed, and so those are constantly happening in my account. Hold on one second. Okay, and okay. So during market rallies, wait for a pullback to enter because that's where volatility goes up. Okay, so when we have a spike in volatility or a pullback in the market, that's when you want to enter those trades. Those are the ideal times. Sometimes it's not so ideal, but that's where you're working towards. All right. All right. So I use a delta of 10 to 12 for bull spreads and 7 to 10 for bear spreads. And lately I've been using, because this market is so bullish, I've actually been using around 5 to 6 delta in my call spreads, even though I don't put them on too often, but that's what I'm using now. All right. All right. An acceptable take profit is 50 to 80%. So just an example right now, just because the market's so bullish, I'm waiting for, I put on trades that were 65 cents and I'm planning to close them at 10 cents. So it's a little bit more than 80%, around 80%, I guess. That really is an acceptable profit level. Okay. And a lot of times I will close them out at 50%, especially if they're call spreads. Okay. If the positions are already been rolled or adjusted, profit target should be 20 to 50% of the credit. And the reason for that is because when you roll a trade or adjust it, you're always trying to get a credit for that adjustment. And I guarantee you, if you look at your delta on those trades, they're much higher than normally putting on a new trade. Okay. So keep that in mind. And the reason is because your adjusted trade has a higher probability of having to be adjusted again. All right. And the reason is because, the market is probably trending in one direction and it continues trending in that one direction, and it continues to threaten your trade. But again, if you stick to your rules and adjusting, and I'm going to go through that, you'll be fine. Okay. All right. So, so positions that have been rolled. Okay. We talked about that. And then you want to initiate the roll 20 points in a low volatility environment, and I'd say below 20 or possibly 15. And then you want to, let me see if I needed to change that. Okay, so in higher volatility markets, and I believe that's in my trade plan, in higher volatility markets, okay, you want to adjust the trade around 40 points away. So if you're above 20 on the VIX, you want to start adjusting that trade about 40 points away from the market. Okay. Once we get into really lower volatility environments, then 20 points is fine. Alrighty. Okay. Remember, save those questions. Okay, to the end. All right. So I'm gonna walk you through now a real adjustment trade. Okay. And this was a long time ago, but I just adjusted a trade a few days ago, and I'm going to show you on the screen here what trade it was. Okay, just to let you know what's really relevant. Okay, and it's very relevant. All right, and it happens all the time. So I put on this trade. It was 30-35, 30-40 call spread, and a 29-45, 29-40 put spread. Okay, and so let's go through it here. All right. So the next day, the market moved up, okay, and it did threaten the call spread. And so what I did was I rolled the call spread, and it cost me 35 cents to roll, right? Now, a lot of people will tell you, well, you shouldn't roll it because you're taking a loss. You're absolutely right. You are taking a loss, all right? So you're taking a loss to save the entire trade, because I don't look at the legs of the trade as the one trade, all right? I use both basically to adjust my position, all right? So you can see at the bottom there, what I did was I rolled the trade from 29.45, 29.40 to 29.55, 29.50. Okay, so that 10%, that 10 strike move basically gave me a credit of 30. Yes, these are in 2019. All right, but again, this is very relevant to what we do today. I'm going to show you a roll that I did just recently. Okay, and we'll talk about that. All right, nothing has changed since 2019 on this. All right, okay. So after that, the market stayed within range, okay? And I was able to get out for 60 cents. So here, let's go through it. So I collected a premium of 85 cents when I put on the iron condor, all right? I paid 5 cents to roll the trade between the call spread and the put spread, okay? And then I took a profit overall of 60 cents, right? So I may have lost on one portion of the trade, right? But I did that to de-risk it, to ensure that I wouldn't take a big loss. And this is very, very important concept in trading this strategy. Okay, so keep that in mind. Okay. All right, so next, I'm going to take you through, this was April of 2020, right? A little bit closer here. These are the trades that I did in April. And this was when I was doing a lot of call spreads and put spreads because the market was really in flux. Okay, we were range bound. It was right after the massacre in March, right, where we went down. But the market was very, very volatile during this time. So now I want you to pay attention because this can get a little complicated. Okay, and remember, it takes me, I'm going to walk through this in a few minutes, but it took me days to actually do all these adjustments. All right. Okay, so let's walk through it. So I put on a put spread on the 7th of April. Okay, then what I did was in a couple days on the 9th, I closed the position for 5 cents that I put on, and I opened a new position, a put spread for 50 cents. All right, so now I earned net 45 cents on that trade because I closed it. Okay, so I don't count the money until I close the trade, right? So now I put on a call spread after that the next day, right? And then I closed the other trade that I had put on, right, where the check mark is, for 5 cents. Well, that's another 45 cents that I earned. Then I put on a put spread, another put spread on the 15th, and then on the 17th, I closed that trade for 15 cents. Okay, so that's another 35 cents that I earned. Okay, now what happens is I had to roll a position, so I adjusted the position. Okay, so I adjusted the position. It was a call spread, and I took a debit of 15 cents. Right. So the position to me is still open because I adjusted it. Okay. Then what happened? So now I put on a put spread for 50 cents, and then I bought to close the other trade that I put on, right? The 28.95, 2900 call spread, and closed that position. So I earned another 30 cents. Then what happened? I put on another put spread at 65 cents and then closed 2 trades, right? 2 trades out, and that earned me 10 cents because I had rolled those positions. So even after I rolled it, did a debit, right? I still collected net 10 cents minus commissions, right? Okay. And then, did I put on another trade here? Let's see. Yeah. Okay, so I closed that position for 50, which netted me 40 cents. And then I put on a put spread and closed an additional spread there for another 50 cents. Okay, So that put spread at the end, I actually closed it for like 10 cents or 15 cents as well, right? But in the end, in April, I earned $2.55 in premium, okay? So that's how I managed those trades. Technically, I didn't have any losses on those. And with 7DTE, basically, it's an over 90% return, 90% of profitable trades that I have in over 195 trades. Okay. All right. So you may have a lot of questions. Hopefully, hopefully you'll be able to go back and walk through those again to get the math. Okay. When I teach people how to do this, I do it very, very methodical. Okay. And it takes experience to learn, how to adjust these trades depending on the platform that you're using. Right. So it's something that before you enter these trades, it's really important to do that. Yeah, and rolling a trade is just the same thing as adjusting. Okay, now trade performance for 2021 so far, it's 77.57.38, and that's actually with fees and commissions, right? And so that's for 2021. Now I want to walk you through these trades that I recently did. All right, and so this is very, very relevant now. So I opened a trade on 4.1, closed it on 4.5 for a net of 50 cents. Okay, net minus commissions and fee, $300 because I'm using 6 contracts. And I use 6 contracts because it's based on my capital. Okay, so based on my capital, I have rules for how many contracts I do. And so for every $10,000, this is a rule that I have, okay? For every $10,000, you want to put on 1 contract for the monthly, 1 contract for 0 DTE, and 3 contracts for 7 DTE, but in varying expirations, all right? 1 contract on 1 expiration, 1 contract on another, 1 contract on another, all right? So I limit the amount of open positions, open expiration trades to 3, right? That's my limit. And usually I close 1 before the 3rd one opens. A lot of times, okay, that happens. Okay, so on the second trade there, I opened a trade on 4.6, closed it on 4.9, and you see the number of days here. I don't hold till 7 days, right? I close them in 3 or 4 days typically. And so on 4.6 and 4.9, I closed it for 10 cents. Same thing, 4.9 to 4.12. I closed it for 50 cents. All right. So over $900 in profit just for those trades. Additionally, I have, and this is a roll that I did. Okay. So let's walk through it. Okay. Now this is one roll. This is a call spread that I rolled. So on 4.14, I sold to open 3, 42.30 and 42.40. Well, that position was, when we hit a high of 90, right, that position was threatened in the market. And so on the 16th, I rolled that position and I rolled it out, okay, to 42.50, 42.60 from 42.30 to 42.40. What did it cost me? 0. It cost me nothing to roll that trade out 20 points, right? The reason it cost me nothing is because I did it early and I did it way before that position was breached. Okay. That's why you want to do this early to ensure that you're not paying a lot of money to do these adjustments. So it costs me nothing. Sometimes it costs me a debit. Sometimes I do get a credit depending on where the support and resistance areas are and where I want to position my trade. Okay. So after that, when the market did start to come down, I added 3 positions for 80 cents. Okay. And then ultimately on the 20th, I closed it for 20 cents total, right? So that trade there, even though I was using lower premiums, still netted me $315 minus the commissions and fees. In addition to that, I put on a trade on 4.19 and I put on another one on 4.20, all right? The 4.20 is 62.5 because I added positions I put on 3 and then I put on another 3, okay, for different prices, and that's why there's an odd number there. Okay, so those 2 positions right now are the premium on those 2 positions right now are 10 cents, and I have an order to close those 2 positions, which should close. One's at 8 cents now and the other one's at 10 cents, which should close today, right? A lot of people in my group already have closed those trades for 15 cents. You know, they're learning. So, but just because I'm very confident that you know, the market is very bullish, then, you know, I hold out a little bit and wait for the very end to close those trades. Okay. All right. So let's talk a little bit about the tech analysis that I use for this. All right. What you're looking at is a screen, and I know it's hard to see, but the the positions here. Let me see here. If you can see my, yeah, you can't see my cursor, unfortunately. All right. So let me walk you through it. So this is a fib, right? So this is a fib drawing, Fibonacci retracement drawing that I drew for my, and if you get my newsletter, these are the short-term support and resistance areas. Okay, this is an hourly chart. So I drew my fib from the left bottom corner to the top right corner, and in that fib, in those fibs, you'll see support and resistance areas that appear. Okay, and let's go through that. So these are the weeks. I wanted to share with you the weeks, how the market moved from top, you know, from bottom to top, basically, and I was able to really capitalize on this trade because it kept moving higher. All right, so I kept putting on put spreads. You know, when every time I got a little dip, I put on a put spread, and all of those trades were profitable. Okay. All right, so let's talk about the areas of support and resistance here. Okay. So the fibs naturally give you these areas, right? And you can't see the numbers in here, but it starts with 0, 23, 6, I think, 38, 6. I can't remember, but when you draw the fibs, right, it gives you those areas of support and resistance. So when I'm trading, and I use this for 0 DTE too, when I'm trading, I look at those areas, and if it's getting close to being breached, right, and in an area that's now, you know, points away from where I need to adjust, right, I start getting ready. So I create the adjustment trade and make sure that I'm ready to pounce on that as soon as we breach one of those support levels or resistance levels. Okay, and that's how I use it. So it's not Bollinger Bands or RSI, which I use in other cases. You know, it's really support and resistance that I use to make sure that these trades are profitable and they stay profitable and not get large losses. Okay. All right. Same way I use the daily in the same way. This is the daily chart that I use for longer term support and resistance. I'm watching this as well on a daily basis and making sure that that we stay within those support and resistance areas. All right. Okay. So that's what I got on 7 DTE. Okay. And I wanted to share with you on my next webinar. Stick with me here because I haven't ended this, right? So in the next webinar, I'm going to talk about my futures trades. Okay. Now this is my micro futures, right? This is 1/10 the size of minis, which you can trade. And this is honestly, this is the best trade for retail investors that has come out in years. All right. I mean, it's amazing. All right. So I started with $3,000 in October. My account is over $15,000 trading this. It's easier than trading options. So in my next webinar, I'm going to be talking about this. Okay. And in my trade alert service, we use this trade as well. And I'm telling you, it's such an easy trade, especially after the time that I've put in it. To really make money on this thing. Okay. I mean, we net out a couple $100, you know, every 2 or 3 days on this trade alone on micro futures, as long as you know how to trade it. All right. So just a little teaser here for the next workshop. All right. So the question is, would you like to follow our trades while you learn using these high probability strategies like 7-DTE? And we have a lot more as well in our trade alert service. Okay. And it really will, you basically learn, you earn while you learn. Okay. We don't throw just the trade alerts out at you. We actually educate. We have an education area that we use, and we educate our traders. And my goal is to make you independent. That's always been my goal. When I started my journey here with Facebook and teaching people how to trade. Okay. Right. So remember, we talked about interested in learning new strategies, or maybe not seeing your account grow, that you haven't found the right strategy. Well, I'm here to tell you that you can break these barriers now. Okay. And the question is, are you going to keep doing what you're doing and hope that one day everything will stick? Or are you going to finally take the steps to, go to the place that you want to be and that works? All right. So learning, training, instruction, practice all lead to success. However, right, you need discipline, you need commitment, you need having an edge, and a no-quit attitude. And once you start trading in this fashion, you build your habits, okay? And you just don't go back. You build these strong habits, and it's just innate when you're trading, and okay, this is the breach area. I'm going to close the trade, and you don't even think about it anymore, okay? And that's how you stay solvent and profitable, right? All of these things lead to success. So the question is, right? You want to learn what you want. If you want to earn while you learn, we have an awesome trade alert service, and people have told me that I've been in many alert services that this is nothing like anything they've had before. All right. First of all, we're dealing with very succinct trades that I've developed over time, and the back testing has been my own, right? So all of these trades I've done over the years, and making sure and teaching people how to make them profitable. So our trade alert service uses Telegram, okay? And whether you're just getting started already or successful, you want to expand in your strategies, we're going to help you, okay? And you can trade at the highest level, okay? It's designed to transform your trading from uncertain to predictable and teach you how to generate constant returns. All right. And so what I'm going to share with you is an offer for our trade alert service, and it's not open at this time, right? And we do this because we want to focus completely and solely on our traders, right? And so when people are coming into the service, they're asking a lot of questions, okay? And we have an orientation session for you, an education center, like I mentioned. And so we're able to, we open 4 times a year, and we're able to answer all the questions all at one time within a week or two, right? And then we close it up again, and we focus on our trades, and that's what we do. So we're closed right now, but I want to encourage you to join our waitlist. It's free. You can make a decision. We ask you to make it by the 23rd of April, because that's when we start, going into our open season launch. And the bonus we'll talk about here in a second. Okay. But let me talk a little bit more about the trade alert service. So we have live chats and subscriber chats, different chat groups, to make sure that the conversation is set up so that you can get accurate trade alerts, right? And the trade alerts are not in the chat sessions, they're in channels. And so it's one-way communication. The channels are for the alerts, and you can set up your channels to ding, to lighten up, different things, and I show you how to do that in Telegram, so that you're making sure that you do get the alerts. When I trade futures, this is what I do, So I trade a lot of times in the middle of the night, and I actually took a poll in our trade alert service to say, hey, would you rather just me put out the trade alerts during the regular session or at any time of the night? 100% said any time of the night. So a lot of times, I mean, I do get up a lot, you know, and I watch the markets. That's after 6 p.m., the futures market, and I trade. I trade sometimes all night long, and it's automated because I put in my stops, I put in my, you know, my targets, and I just let it run all night long. So the emotion's out and the trade plan is in, right? All right, a few success stories. You know, Matt loves the Iron Condor. It's been trading it for a while, and it's just I call it the career trade. I mean, that's how I got into this. I just traded monthlies and built my account up to where I could trade full time. Okay, it's another one, trading zero DTE. Made a lot of money during that period of time, and another one that made $800 in one day just from one of our trades. And these are consistent. Okay, it's just not one day success story. And Dwight, you know, loves zero DTE, and he's not with us anymore, but he's independent and trading on his own. But it's something that he got a really good experience with. Okay, so here's my guarantee, guys, right? If you get into our trade alert service and you lose money in your first month, I will refund your subscription by 125%. And guess what? I've been at this for 2 years and I have never refunded anybody that amount because they always make money in our service. The reason is because we have an edge. We have great trades. We have great traders. We have trade plans that work. And that's the reason that our trade alert service works. And why we have, you know, over 150 members at this time, right? So here's the deal, guys. Our normal sign up is, excuse me one second. Our normal sign up is $59.99 and $129, but by signing the wait list, signing up in the wait list, you're going to get a reduction of that of, you know, $20 for life. Okay. In addition to that, we do have a stock trading service that we're putting on, and we're gearing up for that service as well, and it's very complimentary, and we'll talk about it at one time. All right. All right. Another thing is always want to share the trade course because it goes hand in hand with the trade alert service. So my recommendation is you take advantage of the lower cost in the trade course now and get prepared for your trade alerts. When you're ready to do, when you're ready to take on the subscription service. All right. A lot of people do buy the course beforehand. And this is something that I put together a while back because I was doing individual coaching for traders. And I thought, okay, let's just put a course together, you know, and make it much more affordable. I mean, I was charging $800 for the same thing that I teach now in the course. Okay. So the costs are basically the one-on-one mentoring I did, as I mentioned, is $800. The group coaching, I was charging $400. So the value of the course is $397, and the regular price is $149. But you can get it at $129 if you decide to buy it now. Okay, and again, it's hand in hand with all the trade alerts that we put together. Right. The question is this for you? Do you want to learn a step-by-step process to gain income in a market that goes up and down? Do you want to finally break the series of losses and account drains? And do you want to earn consistent income that sets you apart from traders? Of course you do. Of course you want that, right? So remember what you get access to. So it's $20 off when you subscribe, you know, by joining to our wait list. You get professional traders. So I trade full time, and another trader friend of mine that trades with me puts on a ton of trades as well. He's been trading for many years and puts on different kinds of trades, option trades, and is very, very good that I trade with as well. We have a training education portal, basically, that's outside of Telegram that teaches you Elliott wave, ABCD trading, harmonic trading. Okay. And we actually have live webinars within our trade group that you can join that teaches you how to trade. So it's not just about the trade alerts. Okay. I really want to make sure that you guys get educated and experienced in trading so that you can become independent. A lot of people go and take the trade alert service for 3-4 months and then they leave because they got everything out of it they possibly can. But, you know, I mean, trading with other traders, there's nothing like it. You know, it's a lonely world, and the cost, you know, far outweighs, or the value that you get far outweighs the cost in this service. All right. You get automated signals, seconds of the trade. Telegram is very, very fast. Okay. You get a fill price, target price, and a guarantee that you'll make money. Okay. A lot of my trades are actually come from my account, especially, you know, the 7 DTE trades are automatically integrated. So as soon as I put on the trade, and I don't ask anybody to take a trade that I don't take. Okay. Every trade that I put out there in a signal, I trade myself. Right. And so this is just a winning combination, right? So with that, let's see here. Are there any questions? I see Stephen has been answering quite a few here. All right, let me see. I'm gonna go back to the questions here. Wow, there's a lot of questions. All right. Yeah, futures broker. I'm gonna start from the. Let me see. Tradeovate. That's the one I use. Actually, you can. The margin is $50 and $100. It's amazing if you just day trade. Okay, so very, very little margin capital that you need to actually trade futures now. And Tradeovate for me is the best because I've used TOS, very, very expensive. And Tradeovate has very, very good automation tools that are great. Okay. And that's the one I use. Very low cost. Let's see here. Okay. I think answered. Yeah, Stephen answered, I think, all the questions. It was great. Okay. Anything technical about the trades that you guys have questions about? Anything technical that I can help you with? Yeah, we don't do free trials anymore just because people didn't take it seriously. And with the guarantee, you have nothing to lose here, you know, by joining. Yes, you can do it in Canada. We've had people from Canada. I think they use Interactive Brokers and Thinkorswim in Canada as well. Capital to start is really, we recommend $3,000. And that's to use with one trade. Oh, the Fibonacci for the daily. Wow. Okay. For the daily Fibonacci, I use about 6 months, and for the short term Fibonacci, I use about 3 months. Okay. The education portal, I'm not sure, but we have a course, and I believe that's 16 lessons. But we also have an education portal for the trade alerts as well. I have to do 70 TE entry. Will get dinged as a pattern day trader. Oh yeah, no, 70 TE. You don't have to worry about pattern day trader because I think I've opened and closed a trade, a 70 TE trade, once or twice before, just because we had a very aggressive market. But other than that, 99% of our trades are from one day to the next. Okay, at least the next. Is the extra included in the SOS signal service? The course has a cost, and the signal service has a cost to it. But you get a discount on the course for $129, and you get $20 off for life if you join the wait list. And then once we open it, you get in. Okay, and then we back off the cost by $20. The link is not working. I'm clicking your link and trying to copy, not working. Oh, I think the link takes you to the page. I'm not sure if you can copy it. the link down here. Look in the offer. Yeah, you can't. You'd have to cut and paste that one. Sorry about that. But look at the offer, and let me plug it in to. Let me see. Oh, okay. I don't have it. I don't have the link. Stephen, do you have the link on that? Let's see. Let's see if we can find the link here. Ah, there it is. Okay, put it up again. Okay. Wait, I can paste it. Okay. Yes, and the webinar is being recorded as we speak. Okay. And you will get a replay of this recording. Are you holding trades overnight? Absolutely. I do with 7DTE, with futures. I do hold them overnight. What is covered in the course? Let me take you back to the course here. Let me take you back to the course. Okay, let's cover. Here's what the course covers. Okay. It does not cover futures. That's a whole animal in and of itself. Okay. We do 0 DTE trade alerts. Absolutely. Every Monday, Wednesday, and Friday. Great. Awesome, Dave. That's a smart way to start paper trading. 59, the 59 a month. No, 7 DTE is with 79 a month. Okay. Yep. I use Thinkorswim as a broker. It's great for adjusting trades. I've heard other people using Tasty Trade. It's not, but you know, you get used to whatever you use, and you make use of it, and it'll work. I use Thinkorswim. I've been using them for years, and that's what I use. Okay. Any other questions? The SPX credit course includes not direct mentoring, but any questions that you have. I answer all questions and comments, and from the trade course. Okay. Why should I move to Puerto Rico? Because you pay 2% corporate tax here, 0 capital gains. That's why you want to move here. And so what's included in the 59 plan, the lowest plan, monthly trades and Ike's trades, a lot of debit spreads, a lot of calendar spreads, and what do you call it? And the monthly trade and diagonals that Ike puts on a ton of them. We have to be up over 60, 70 trades a week, I think, at this point. Yep, 0 capital gains in Puerto Rico. How long did it take to trade full time? Oh, about 20 years. Literally. You have no idea how many losses I've taken. So I'm sorry, not an overnight success. Not this time. A lot of hard work and a lot of pain, man. But I put together something. I'm telling you, you have no idea the pain that I went through. I put together something, you know, with these monthly 7 DTE and 0 DTE plans that is just rock solid, guys. It's rock solid. You're going to make money. All right. I think that covers it. If you have any questions, if you think of anything, just email me. All right. And I'll answer all your questions. All righty.